Hello and welcome to another update video about MATIC. For anybody who's new on the channel, let's start on the 4-hour time frame. Let's talk about our primary scenario here on the MATIC 4-hour time frame. You can see the price structure that developed from this 2023 September low. And it counts best as a 5-wave move to the upside, but it cannot be impulsive because of the subdivisions. The subwaves are all corrective, especially in the wave 1, very visible in the wave 5 as well. The wave 3 can be counted as a 3-wave pattern as well. So we're dealing overall here most likely with a leading diagonal in wave 1. I always have to say and have to warn that leading diagonals, well, look, we can really not trust them because leading diagonals, well, they consist of unreliable corrective structures, and you can always count a move like that as a WXY pattern as well, if you really want to, and that would be a corrective 3-wave structure, which is why we usually highlight a support area once a 5-wave pattern as a diagonal completed. I highlight that diagonals, cannot really be trusted, and then it's up to the viewer, to the trader, the investor, to make their own decisions based on that, let's say, risk warning. Still, that being said, I still think that MATIC's chart shows one of the best setups currently available in the crypto market. It gives us very clear parameters, very clear reward and risk parameters. It shows that from the long downtrend, that started really in, was it actually here? Basically in 2021. And then obviously here, okay, we had a bit of a rally, but then another downtrend started in February 2023. I mean, most of 2023, this chart was trending down. That from this downtrend, a first recovery rally has started that we can call, again, a wave 1 rally, right? And a 5-wave move. And first rally and then pullback, typically quite an interesting spot, to look for positions. Okay, it might trend a little lower if it breaks micro support, but then we have this support area still available. It can be used, the entire box can be used for this wave 2 pullback. Wave 1 to the upside here. Here, wave 1 to the upside, wave 2 pullback. It might stretch out a little bit, but what the support levels are, we're going to take a look at now. So overall, before we do that though, third wave rally can start as long as we're holding support. Main support area ends at 58 cents and the target for the third wave, minimally $2.12. Does it mean it's guaranteed? Nothing is guaranteed in markets. Does it mean we know it's going to happen? Absolutely not. It's all about a probabilistic assessment of what the chart is doing right now. And because we have 5 waves up and a corrective pullback and we're holding above that 58 cent support level, a third wave expectation, an expectation for that third wave rally is reasonable. And as I mentioned to you, minimum expectation, in this wave structure would be $2.12, but that is actually a little bit too weak. So better would be $2.42, and further extensions are always possible. A realistic one for a third wave, for example, is also $3. But first of all, let's see if we can get to $2.12 anyway. I just have to highlight that extensions are always possible because in crypto they often happen. And then obviously if we assume that maybe this wave 2 finished on the 23rd of January, we can count a 5-wave move up, from that low here into the 31st of January. So there was a 5-wave pattern to 83.3 cents. Then a corrective pullback, which might be complete, to be honest. So I'm watching if that last swing low is holding at 76 cents. And if that's the case, the market might have started the smaller degree third wave to the upside, which might reach, which might reach like $1 or so. But again, based on that chart, that swing low that formed on Sunday needs to hold. What happens if that breaks? It wouldn't be a disaster. We would simply drop a little further into micro support. At this stage, it's too early to say it's bottomed anyway. I mean, this is simply just, okay, we are watching if it's holding, takes a break above the B wave high at 82.2 cents to suggest further that this wave 2 indeed completed, and a break above the 83.3 cent level, which is the Wednesday high of last week. That would be better confirmation, okay? Until then, there is still plenty of space in this micro support area. Micro support for this smaller degree wave 2 goes all the way down to 71.9 cents. We also have the 75.9 cent level here, 74.25 cents, 71.9. And then in between, we've got these targets, which are based on the length of the A wave, because the C wave often has the same length or a certain Fibonacci relationship with the A wave, and they are the white numbers here, 75.4, 73.9, and so on. And there is a partial overlap with the micro support area. So ideally, it's turning around somewhere there before breaking them, before breaking these zones. But you know, even if there is a break, yeah, it might invalidate the idea that this larger degree wave 2 has bottomed, but it could still, you know, find support in the larger support area. The only thing is though, that below 58 cents, I haven't got anything clearly bullish left. That's the thing, because then also this wave 2 is too deep to be reliable. At the moment, this wave 2, which possibly ended on the 23rd of January, went into the middle of the support area. Ideal. We're exploring if it already ended. If not, fine. Let's see if it can find support a little lower, possibly around 66.7 to 65 cents, but it still has plenty of space. Both scenarios, even the micro count, but even if that breaks, even the larger degree wave 2 has still plenty of space. To be honest, in an ideal world, we're now holding at least this micro support area, which goes down to 71.9 cents. Yes, there's one level below it, around 71.5. But really what we need to avoid is a sustained break below that 78.6 retracement level of that micro support area, because that would indicate that, yeah, this larger degree wave 2 is still in the making, which again isn't bearish, but it would suggest that this overall correction might drag on for a little bit and so on. At the moment, I'm not convinced yet that this smaller wave 2 is finished. I'm simply watching it. I'd be happy if it is, because the C wave ended below A, which is what we want to see. We landed in the support area, but bear in mind that the target area that I mentioned to you is a little lower than that. So we'll see. It's smaller degree wave counts are obviously very dynamic, but it's technically acceptable, you know, just watching if we can now take out the previous highs. Again, the chart is prepared for a breakout. Just the bulls need to show up. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.